Welcome back, everybody, to Volatility Trading Strategies. So I'm on my 12th year now managing the best investment portfolio that I can here at VTS. Of course for myself, but also helping as many of you out there as I can. I've always said I know I'm not curing cancer here, but helping people get to that retirement finish line with more money than they're ever going to need, I consider this one of the most important jobs in the world. I take it very seriously. Everything in your life will be enhanced in retirement if you have a couple $1,000,000 in the bank. Now, some people might get there just because they have a really big income and they're just going to be able to save a bunch of money. But the reality is most people won't have the income to grow a retirement of that size on savings alone. The median personal income in the United States right now is $46,000 a year. It's nearly impossible to retire a millionaire on savings alone when you're making 46 grand. Even the 75th percentile is $80,000 a year. If you're living in any reasonable sized city and maybe you've got a couple kids, even 80 grand a year isn't going to produce a whole lot of savings. The key, and you really do need to embrace this if you want to succeed, is you're just going to have to get a better rate of return on your investments than the average person. Even with an average income, 30 years of compounding a good rate of return, and you're going to be way ahead of most people. Today I'm going to show you the numbers that you've never seen before. I'm going to show you the massive difference between average investors and good investors. And if you want help being one of those good ones, you know where to find me. There's a link in the description down below for a free trial to VTS, open to everybody. Check out my work if you're serious about your retirement. So let's start with the average investor. Studies have consistently shown over time that the average investor makes about 2 to 3% a year, which in most countries barely outpaces inflation. This is what that looks like if compounded over 30 years. Now, the assumptions I'm using here, we start with $10,000, annual return is 3%, they're adding $500 a month to their investment account, we are using capital gains just to be conservative, and I'm also using wage growth that is slightly higher than inflation. After 30 years, this average investor saving $500 a month is going to retire with $308,000. Now, it's very important to point out here that saving $500 a month with a 3% wage growth on top of that, 94% of the final retirement value was just their own money. That's what happens when you make an average income and your investments barely outpace inflation. Now, $308,000 in retirement, that might not sound like much money. I hope you have higher goals for yourself than that. But that's actually higher than the average American. Right now, the 50th percentile is just over $200,000 in retirement. We have a true retirement crisis on the horizon, and I definitely want to help you avoid it. Let's move on to the second level, the buy and hold investor. I'm sure you've seen millions of people online recommend that you just dump your money in index funds and you don't even try to beat the stock market. If you follow my work, you know I don't believe in that nonsense, but if you did that with index funds, you would beat the average investor. In the last 25 years, the S&P 500 has returned 7.7% a year with dividends reinvested. But the drawdowns holding stocks are insane. It's way too risky for just 7 to 8% a year. Doing a 50% stocks, 30% bonds, 20% gold portfolio is much smoother over time, and it still returns 6.25%. This buy and hold investor with all dividends reinvested will get to $432,000 at the end of 30 years. That's definitely better than the $308,000 for the average investor. Now, they still added $500 a month, meaning 67% of their retirement savings came from just their own money. But coupled with Social Security, the buy and hold investor after 30 years should probably still be okay. Obviously not balling out, that's not a whole lot of money to fund a multi-decade retirement. Again, I hope you have higher aspirations for yourself than just meeting the basic necessities, but you would be okay. Here's what it looks like though if you bump that rate of return up to 12% a year. Again, there's going to be many of you watching who don't think 12% a year is that great, but it's actually pretty decent, and if you manage 12% a year long term, now we're talking about $850,000 in retirement. At that level, you're going to have a few nice vacations in the future. You'll have 4 times as much money as the average American. Actual investing return is really starting to pay off at this level, and only 34% of your money was coming from your own savings. That's what you want. You want your money working for you and actually compounding, not just retirement coming from your own pocket. But what if you made a really good rate of return? What if you let someone with a long track record of success help you do that? I know a guy that might be able to help you. This is that same investor starting with $10,000 and saving $500 a month, but now it's compounded at 20% 2% a year. Now their retirement account is $2.45 million, and 90% of that money came from compounding investments. That's more than 10 times the retirement account of the average American. Do you see the power here? Even if you don't make more than an average income, you can still retire a multimillionaire. No hate on teachers, I'm just using it as an example, but you could have two teachers making the same average $50,000 a year salary. One of them is just an average investor and will have a few $100,000 in retirement. The other puts in the effort, and on the same income, they're a multimillionaire. Don't assume that the people who retire wealthy are the elites with these astronomical salaries that's way out of touch for you. It's not. Now, I can't see the future, but I do know my past, and I have a long track record of success here. Nobody outworks me, and the result is you can get a great rate of return with quite literally 5 minutes of work per day. The average person spends more than 1,800 hours per year working to make their money. I don't think it's too much to ask for people to spend 5 minutes a day just making sure that it's being invested wisely. Each of our 5 strategies on average takes just 2 to 3 trades per month. You read an email, and if there's a new trade, you just log into your software and you're done in a few minutes. And most days there's nothing to do. It's not active day trading. VTS is long-term investing. Saving the $500 or ideally $1,000 a month, that's your job. But claim your free trial to VTS and let me do my job of getting you that great rate of return. I don't want you to just have a couple $100,000 in retirement. I want you to have a couple million and live the good life. Thanks for watching. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.